Segment with BIS Commodities, just taking a look at the week in review. Let's start out and see where we ended up closing some of the commodities for the week. In corn, December corn, we closed a little over 7 cents lower in the week at 3.82 in the December contract. November beans up a little over 11 cents at 8.85 in the November contract. December wheat closed 5 cents lower on the week at 5.08. October cattle closed $7.75 higher on the week at 130.77. October hogs closed 47 cents up on the week at 73.82. And the dollar index looks as if it's going to close somewhere around a point lower on the week on the bottom end of the trading range at 94.90. Starting with the grains, corn. The big news this week was the monthly supply and demand report that came out earlier today. All eyes were focused on the production side of the balance sheet. And taking a look at corn, we came into this report expecting a production decrease through yield and cut in acres, incorporating some of the FSA acres. We did see a reduction in acres, down 400,000 acres. That was in line, maybe a little bit more than what the average trade guess was, but the surprise was the yield per acre, 168 bushels an acre. That's up a half a bushel from last month, and it's up from what the average trade guess was as well. So all said and done, our production numbers came in at 13.55 billion bushels, which was down from last month, but much larger than expected, down from last month's 13.58 billion bushel. We did see the futures react accordingly to the release of the report today as well, again, as we were looking for smaller production numbers. On the demand side of the balance sheet, the USDA left everything alone. And that gave us a carryout of 1.56 billion bushels, which was down roughly 30 million bushels or so from last month's supply and demand at 1.59 billion bushels in the September report. So all said and done, not a burdensome supply of corn, but certainly not a shortage at this point either. Now that we have actual data as far as yield data, as far as acres, less surveys, some actual field data out there, the trade's going to feel a little bit more comfortable about these yield estimates in months to come as far as the supply or the production side of the aspect. And we may be taking a look at a little bit more down the road on the demand side of the ledger to see if there's any adjustments that will be made in there. Right now we're pegging, we're leaving the feed usage and the ethanol side of the equation alone. We are behind on exports at this point on corn. That's something to keep an eye on in weeks, if not months to come as well. Looking at soybeans, the soybean yield came in at 47.2 bushels an acre. That was actually up 1/10 of a bushel from last month. Came in line with what the USDA expected. We were expecting some yield cuts, incorporating some of the FSA data into this report. 1.1 million acres were cut. That was a little more than the average trade guess, but that did give us a final production number of 3.88 billion bushels of beans, which was down from 3.93's last month's production numbers, and a little bit less than what the trade was expecting, 3.9 billion bushels. So we did see a little strength upon the release of the report with these numbers. The production numbers again coming in a little bit less than expected on a few more less harvested acres than expected. And you plug that into the balance sheet, taking a look at the demand side of the equation, we did see the USDA come in and cut exports as we are dragging last year's pace substantially and behind the 5-year average as far as exports to this point in time. So we did reduce our exports 50 million bushels, but we did increase our crush 10 million. So we ended up a net of 40 million bushels less on the demand side of the balance sheet. That gave us a carry out of 425 million bushels, or excuse me, 425 million bushels for the upcoming year. That's down 25 million from last month's 450 million carryout, and that's pretty much in line with what the average trade estimate was going into this report. So from a carryout perspective, there is no shortage of beans here in the U.S. And when we plug these numbers in and take a look at the world numbers as well, we did see a slight bump in the world carryout projections for the upcoming year, and we did see a slight bump in the corn carryout projections for the upcoming year as well, even though we did see a small decrease here in the U.S. So from a carryout perspective, we are not short grains, either corn or beans, from a domestic and from a world perspective at this point, or at this time and place. Other things affecting the grain markets, it seemed as if this dollar play is coming in a little bit as well. If the dollar can hold on these the bottom side of this range, that's probably going to continue to cap the buy commodity, sell dollar type trade. If we break this trend in the dollar, concerns that maybe we won't see an interest rate kick up, maybe we slide that dollar a little bit more, maybe that we'll see a little bit more money come into the corn and soybeans. Certainly there was some money flow this week. We did see outside money come into the markets as well, not only in corn and soybeans, but all the markets, the livestock market, the metals, the energies as well. So that's something to keep an eye on as well. Taking a look at the livestock markets, wild week in cattle. Actually, as wild and volatile as what the cattle futures traded this week, was actually an inside week of last week, all said and done. Even though we did close up today substantially in the futures market, we did not take out last week's highs, and obviously we did not take out last week's lows. Last week, all we heard about was the heavy cattle out there, the discounts taking place in the cash market, trying to burn through those, and it's something we heard for the last several weeks. But we did see a big cattle futures rally this week, with cash trading early in the week at 117, 118 in the Corn Belt, only to see some light 125 cash traded late today here, some stronger cash trade in the South as well. So it seems as if the rise in the futures caused some packers to bid up on the cash side of the ledger as well. Interesting enough, earlier in the week when we were seeing that the lighter or the weaker cash trade, with the futures trading much higher than that, we did see some deliveries come through. We've seen more deliveries come through yesterday, as the futures again trading at such a premium to cash. Now if cash continues to trade at a stronger level, those deliveries will back off. The one thing that is quite interesting as well is the thought that maybe we'd see some boxes, the box meats, rise up as well. That wasn't the case this week, and in fact we tried to hold steady, but today we actually closed boxes to a new low in the choice at below 203, down to 202.97. So it's going to be real interesting to see if the Packers going to get squeezed here. On the demand side of the equation, is demand backing off a little bit, where the Packers short bought this week. Cash trade will be interesting to watch next week. I don't think the volatility of the cattle market is over with yet. We'll keep our eyes on that on Monday morning. The hog futures this week continue to grind higher for the most part, but not a lot. That October contract is sitting at a premium to the deferreds right now. Interesting enough that this is one of the largest production weeks of the year to date. Large kill. The Packers keeping the industry pretty current. So the weights are obviously down from last year, but they're still heavier than the 5-year average. So there must be some demand out there continuing to provide some support to this market as well. So we're seeing cutouts push up here higher, grinding higher as well, just under $90, and the cutout Cash bids, we're following the cutout, but the cutout seems to be the driver of this thing right now. Really, there must be some really strong demand out here short term. The charts do look good on hogs, but they maybe be getting a little bit toppy in here as well. And another thing to keep an eye on is how is that cattle-hog ratio coming into play. Exports continue to be pretty good for hogs overall, while we continue to be a little bit disappointing for beef overall. So that's certainly something keep an eye on, is that ratio as well. So if you have any questions about these or any other markets, please give us a call here at BIS Commodities at 1-800-373-2525.